Hello and welcome back to AIBC Summit YouTube channel. We're here to bring you news on all things crypto and blockchain, and this is the second episode in our series of all things in the industry as we gear up to our digital conference in June. So if you are a fan of the space or you're looking to learn that a little bit more, be sure to give this video a big thumbs up and subscribe. Well, joining me is the Moon Carl to take a look at the crypto markets as crude oil and COVID rattle the news. So Carl, great to join you once again.
Thank you very much. Always a pleasure to be on the channel.
Always great to catch up. We had to talk to you, especially seeing as the past few days. Oh my goodness. So obviously we saw crude oil prices fell below $0 per barrel. And this isn't just bad news for the commodity traders, it will also have a knock-on effect on the markets. So as someone that trades and follows the markets, Carl, how did you view this move?
Yeah, so obviously this is a historic day. This has never happened before. This has never even been close to happen before. And this is truly like a black swan event that no one could have seen coming. Of course, I have been following people who have been expecting low prices in oil, people who have been calling for sub $20, sub $10 even. But seeing prices go negative, not only zero, but actually go negative, this is completely insane and it is unprecedented. And of course, this creates a problem because many of these oil companies, they first of all, they now don't make money off of the oil, but the bigger problem is that all of the debt out there, because many of these oil companies, they have hundreds of millions of dollars worth of debt out there collectively. We're talking about thousands of companies, and collectively we're talking about huge amounts of debt that has been building up during the good times. And obviously during good times, you're supposed to save for a rainy day, and you're supposed to still be responsible with your spending. But low interest rates and cheap money, cheap credit tends to lead people and companies into investing more recklessly. And yeah, there will be a huge problem where we might see a tsunami, of defaults, of bankruptcies in thousands of oil companies. And it is a real threat right now, and I think that of course central banks, governments, they know that. And if there's anything we have learned from the past few months and from 2008, then it is that uh, governments will print money. They will print currency out of nothing, and they will probably do anything they can to keep this from happening. And obviously, this is just a short-term solution, because printing currency out of thin air and just handing it out like that is never the solution to any problem. It just prolongs the you just push the problem into the future. And but I do believe that we will see trillions and trillions of dollars get printed in the next few months and years. And I think that actually we might see tens of trillions of dollars get printed only in the US and globally. I mean, basically no one knows, because honestly, actually it is unlimited. Central banks, they can print unlimited amounts of currency. And what we learned from Venezuela, Zimbabwe, and the Weimar Republic, we see that definitely central banks and governments, they can print unlimited amounts of money, and they can prop up prices to astronomical levels. But of course, there is a difference between price and value, and just because prices go up doesn't really mean that the value go up. I mean, the Venezuelan stock market looks like the best performing stock market in the world, but of course it's just the prices that are high, but the fundamental value there is completely different. But yeah, I see a big problem now that we see the oil prices go down, but the debts are still there all around the world.
And the really shocking thing about this is like an equation which no one knows the answer to, because no one has seen this catalyst of events together in the same situation. Something that I did find interesting is that we saw Bitcoin dominance from yesterday increasing around 3%. When we look at this movement, and it is obviously around the same time that we have seen oil really make headline news on the prices, do we think that actually in the crypto markets, people still view Bitcoin as a safe haven crypto compared to the altcoins? Is that why we did see this move, do you think?
For sure. I think that Bitcoin is the safest crypto by far. And I can go through so many different factors that points towards that fact. But I mean, maybe the number one reason is the hash rate. If you look at the hash rate compared to the other cryptos, then you will see that it's a huge, ridiculous difference. And when someone from the outer world, from the mainstream, comes in and wants to invest in crypto, especially now in financial crisis, people are looking for the least risky assets. And I think that it's just obvious that people will look for Bitcoin and not the altcoins. Altcoins are for speculative purposes and trading purposes, but investing in altcoins in a financial disaster like we're seeing now, I think doesn't really make too much sense from a risk perspective, because I think people are really looking for the least risky places to put their money. And of course, Bitcoin is not the least risky place in the world from the perspective of the mainstream. I think that the main safe haven that people go to in the immediate short term would be cash, for example. Cash is seen as a much more reliable way to put your money rather than in Bitcoin. Um, but obviously, seeing trillions of dollars getting printed and trillions of um, euros, and we're seeing fiat currency globally get printed, and eventually this will put a huge pressure on the value of the fiat currencies, and the confidence from people, or the confidence in these fiat currencies will go down, and eventually people will be looking for alternatives. And Bitcoin and gold are both these safe haven assets that I believe are going to take a big chunk of this value whenever people do look for these alternative safe havens.
And one of the other alternatives, while we're on the topic of that, we did see that Grayscale, which is one of the largest crypto asset managers, it raised over 500 million US dollars. One side of that came from new investors, and 88% came from inflows from institutional investors. What does this tell us about investors and actually onboarding of cryptocurrencies at the moment?
Yeah, I do think we are seeing an increase in institutional demand. And I think that this comes from the fact that the fundamentals of Bitcoin have become undeniable to people that did the research. And especially now that we do end up in this financial crisis, the smart money, basically, they will be diversifying into different asymmetrical, like assets that could perform well in a financial crisis. And I think that even if the risk reward in Bitcoin isn't, I mean, there's always risk wherever you look. There's always risk, but I think the risk reward in Bitcoin is so incredibly attractive to investors that people, at least, or these institutional investors, they will put at least some of their money into Bitcoin, basically getting off of zero. Uh, People can't afford not to have at least a little bit of Bitcoin, because if Bitcoin happens to go 10x or go 100x, which would actually make sense based on previous performance, right? Then you simply cannot afford to miss that boat. So I think that we see more and more institutions diversify into Bitcoin. And obviously, when you have billions of dollars in these big institutions, when they diversify just a small part of their portfolio, then of course that brings in a lot of value, or a lot of liquidity into Bitcoin. And I think that we will see this increase, especially now in these very uncertain times. But I think that it will take some time before we see the bigger part of this liquidity flow in, because as I've talked about in, I think, one of our previous interviews, and now in the initial stages of the crisis, people are losing so much money that they have to cover their losses by selling other assets. They have to sell even things that they don't want to sell. So that's why we saw gold get an initial dump in the big first dump in the stock market, and also Bitcoin, of course. But I think that when this crisis starts to escalate and take a turn for the worse, when we see banks default and whatnot, that's when I think we will see a real interest, a genuine interest in Bitcoin, and of course gold also.
And we have seen the interest as well already when it comes to Google searches for the phrase, the Bitcoin halving, which is really interesting. And I think people may be working from home. They also have a bit more time on their hands to be on the internet and to search for some new information. When we look at this, because this is such a huge monumental event for anyone in the crypto space, what kind of things are we thinking, and what are your expectations as we do prepare for the next halving, which is pretty close now?
Yeah, the halving is for sure a very, very interesting event, But the most interesting thing about this halving is that it is taking place in a financial crisis that has not happened before. And I think that this will put a lot of attention to the fundamentals of Bitcoin and what this halving actually means for Bitcoin and the future inflation of Bitcoin. Because as everyone watching already knows, probably the inflation rate will be cut in half. And what this means is that this will be the exact opposite from what the US dollar is currently undergoing and what the other fiat currencies are undergoing. So we're seeing all other we're seeing all the fiat currencies right now being under quantitative easing, basically inflating the supply, and this leads to inflation, right? The increasing inflation, while Bitcoin will do the exact opposite, what I call a quantitative hardening, where we see the opposite. The inflation will be cut in half. So this will be like a divergence, right? Where Bitcoin is taking the opposite route from fiat. And when people eventually do lose their confidence in the fiat currency system, then to me it is just very obvious that people will look to Bitcoin, because the flaws of the current monetary system um, gives Bitcoin value. I usually say that I think the value of Bitcoin doesn't really come from Bitcoin itself. It actually comes from the flaws of the current monetary system. So that's why I think it's very, very interesting to see the halving happening right now, as we see the Federal Reserve and other central banks doing the biggest quantitative easing, the biggest money printing we've ever seen historically. So that makes me very bullish for the Bitcoin price for the mid to long term. Obviously, in the short term, it's not necessarily the case that this is going to lead to a price increase. But for the long term, I think that this is a very, very, very bullish setup for Bitcoin.
And we do always end these interviews with a price prediction. I know our first interview around 3 months ago, I think you said $2 million US dollars per Bitcoin eventually at one point. We are getting to a point where we are seeing potentially inflation in the US dollar. We are seeing, obviously, as you mentioned, this economic status of the world, which is really shaking everything up. Your price prediction now, has that increased at all? Are you able to put a figure on you for the long term?
So I think that first of all, Bitcoin has a great chance of ending this year above $10,000. I think that's very possible. We seem to be going kind of sideways currently in the short term. But I think that, like I said, the halving will put a lot of attention to Bitcoin, and this will increase the demand for Bitcoin. For the long term, I am as bullish as always. I think that Bitcoin has the fundamentals to support these big price predictions that I usually talk about. And the end goal for Bitcoin is, of course, in the millions of dollars. But I really do believe that Bitcoin could reach $1 million well within 15 years. That is what I'm basically betting on myself. My portfolio is extremely weighted towards Bitcoin because the risk reward is just too attractive. There is no other way for me to find another asset that can compete with the risk reward of Bitcoin. Now that we're seeing this financial crisis, of course, gold is the asset next to Bitcoin that I look towards, and silver. Actually, I prefer silver before gold currently because of the huge difference in the ratio between silver and gold. But that's another topic. But I really think that Bitcoin has the perfect bullish setup for the long term, and Bitcoin will reach the millions of dollars. But $1 million within 15 years is a very reasonable target in my opinion in today's monetary value. But of course, as I've told people before, when we see inflation, then eventually the dollar value or the dollar equivalent doesn't really matter, because the dollar itself will be so devalued. So if the dollar loses 90% of its value from now on, then we shouldn't really measure the Bitcoin price in dollars, because one Bitcoin could be worth quadrillions of dollars, but it doesn't really mean a lot, because just like in Venezuela or Zimbabwe, measuring assets in the national currency doesn't make any sense, because it's hyperinflation, and this is something that really can happen to the dollar.
Well, thank you so much for summarising everything in what was such a busy and volatile time. You've taken time out of your day, so thank you so much, Carl. It's always great to catch up, and I look forward to speaking with you very soon. Thank you.
Thank you very much for having me. Yeah, let's do another video again in the future.
Thank you. Well, that's all for myself and the Moon, Carl. We'd love to hear how you found the segment, so share your thoughts in the comments below.